detectors because it's going off right now.
No, I hear it. Hey, everybody. Welcome to another Ask Me Anything. We're going to go around the horn here, do some introductions here in just a moment, but go ahead and get those questions in the chat box, and we'll see you guys in about 14 seconds. All right. Hey, everybody. Welcome to another Ask Me Anything. As always, go ahead and get those comments in the chat box. If this is your first time to Ask Me Anything, this is for you to ask any questions from the group here. So put those in there. Anything about infinite banking related, money, finance, and investments, something we can't give advice on, but that's fine. Go ahead and ask those questions. Everybody, I'm Brian Fouch here up in North Idaho, recovering from a fractured rib, a fractured elbow right now. So it's not moving around too quickly right now. Yeah, don't ever recommending fracturing or breaking a rib. It's not fun, I found out. But yeah, with that, we have a small group because we do have a live event here this weekend. So we got a lot of people that are traveling to that. Tess, are you going?
I am. So is Linus.
When are you leaving?
Tomorrow morning.
Tomorrow morning. Okay, cool. Well, I'll pass it over to you, Tess, anyways.
I'm Tess Hulak. Insurance has been my life my entire career. I started in it right out of high school. Some headhunter chased me down and would not let me go until I signed up. And now I love it. And I can't imagine being anywhere else. And Brian was talking about fractured ribs. My mom used to walk with me at 5 a.m. in the morning, but she fell a couple weeks ago and broke 2 ribs. So she's done.
Yeah.
She started to get back into it, but you got to figure she's in her mid 80s and she's still plugging along. So I'm proud of her. So now on to, hey, I'm going straight down so I don't have to point. Kevin.
All right. Thanks, Tess. Kevin Krause, upstate New York, not a few hours from Chris of the team up there or whatever. But prior to doing this, I was a teacher, veteran, as you can see from the shield there, red, white, and blue, to retired first responder. And now I'm loving life and enjoyed retiring life and want to continue to now help people with infinite banking, velocity banking, and pretty much, improving their life financially in any type of way as much as we can as a money mentor and part of the team. And Linus next door was one of the guys helped me with my first policy. So let's go on to Linus.
Thanks, Kevin. Yep, I remember. It was fun a few years back. Hey, everyone. Linus Note here from Hopkinsville, Kentucky. Happy to be here and help answer any questions and provide insight I can. I apologize. I probably made us go live a little late here. I was actually deep in some numbers and illustrations for a church that wants to get a policy on their bishop, their pastor, and practice infinite banking within their financial structure to like acquire new buildings and equipment, lots, financing other churches, like actually lending to other churches, the way I understand it. So it's pretty cool. Lots of different options there with it being inside of a nonprofit structure that's a tax exempt entity. So it was a lot of fun. With that, do we have any? Oh, here's Joe.
Later.
Oh, sorry I'm late. I had technology troubles, of course.
What's new?
What's new?
Exactly. See, but everybody knows it, so they just expect it. So that's why it's awesome.
Welcome to the party, Joe Hela.
Why, thank you. Yeah, I'm up here in Buffalo, New York. Been playing around with HELOCs for 15 years, IBC for going on 6, and we're here to answer all your questions. So bring them in.
There you go.
Today, we are live streaming from the hood. You will hear the smoke detector chirp in the background. Just forget it.
Sorry. I've got about 30 of them throughout this house, and I missed one, and it's talking to me right now.
Yeah. Speaking of that, I got to get some in my house, actually. Thanks for the reminder. Yeah.
I thought it was my house for a second. I was like, wait a second.
No, it's me. I know it's out there, but they're like my dad. Okay, I'm the daughter, so you know how dads are. So there's one inside the door, one outside the door, one in the hallway. So 3 of them in like a 10-foot radius, and I must have got distracted and missed one out there.
That's a lot of them.
The electrical ones hooked up at the bottom of the stairs. I have them all. My dad is a very conservative, take care of things kind of guy.
Yeah, it's hard when you figure out which one it is, right? If you got too many in your house or whatever, it's like, oh, which one is it?
Yeah.
Well,
And I never get them all, but no, obviously I didn't.
okay. So I see I've got a question that just came in, but yeah, go ahead and get those questions in there, guys. Any questions you have, go ahead and pop them in there. But we'll go and start with this one from Campachena. So how do I start my own bank, and how long does it take to actually take a loan on it? So, I mean, it's different for everybody. I mean, Lynn, you can speak to the application process.
Yeah, I mean, your first question there, how do I start my own bank? I mean, the call to action here really is to schedule a call with one of us to look into your specific situation, what your needs are, and what your priorities are, to see what is a fit for you. What we're talking about here is the infinite banking concept is a process, and it uses specially designed and engineered whole life insurance policies. And so that's kind of just a really fast overview there. As far as how long, I mean, when you decide to go for it, to do an application and go through the underwriting process, that typically takes 4 to 6 weeks. So it's not fast necessarily. So you may be looking at maybe 2 months before you are having a policy issued for you to sign and fund and to get started there. As far as actually taking your first policy loan, is going to be within 30 days of that policy being signed and funded. It's typically going to be around half that time, but we say 30 days just to under promise and over deliver.
Yeah. And then one thing I would say here is it depends on where you are on your journey as well. Because I'll be honest, we don't always recommend that someone does start their infinite banking policy right now, because you might not have the right mindset or the resources or whatever. There are lots of things going on. But that's why, as Lynn has mentioned, we recommend scheduling a call with one of us, and we'll put in the chat here in a moment our call link. That's why we recommend that, because then we can work with you on that, understand your situation, what you're trying to accomplish, and then help you plan from there. So now, if you're talking about a traditional bank on the bank corner, yeah, that's very different.
So question for you guys, what's the fastest you've received from when you send in a loan request? What's the fastest you've received your funds before?
20, yeah, 24 hours. And it was about 24 hours. I had a client request it one day and it showed up the same day, but they did it really early in the morning and then it came through. I couldn't believe it.
Mm-hmm. And not a realistic expectation.
No.
Yeah.
Being from the accounting department of insurance companies, generally we only cut checks for certain things once a week. So that's pretty impressive.
Yeah. Yeah. I don't remember what company.
We don't like this instantaneous stuff. You need more staff to do that.
Yeah.
Yeah. It's pretty cool when literally you can, just send something in and boom, it comes like either the next day or maybe 24 to 48 hours. Or if you are putting in your premium or your deposit for the year, your annual amount, but you send in a loan form with it, they're going to, it's coming in, it's coming right back to you, right? So you could potentially get it back really quick.
Joe, how about you? What's your weakest?
Next day for me.
Yeah.
Yeah.
And they have a follow-up question here that says, how much can I start with? And then can I do it with an ITIN number? So on the second part of that, yes, you can typically do a policy with an ITIN number, depending on your situation, your residency, and all that kind of stuff. Once again, that's why we would have a call. But yeah, I do have a lot of clients that just have an ITIN number, which is an individual taxpayer identification number for everybody else. And then how much you can start with? Anybody else want to take that one?
Well, the maximum is 5 million.
5
million. That's not the maximum, but
how much can I start with is how much does it make sense for you to start with? What is going to be the utilization of how much comes into the house? What is going to be the efficiency with what you're going to do with it? So maximum is 5 million and the rest is up to the strategy call and what you decide.
Yep. And there's a range. I mean, there's qualifications, and every insurance company has different guidelines or underwriting guidelines. They're all fairly similar, but they all slightly different. But we follow those. And so once we have that phone call with you, we could go through what your numbers are specifically for you. But good question.
Every policy is different. Every person's age. male, female, how much income do you have? What are your assets? Every policy is different. I've never made two of the same identicals.
I have.
Unless they were twins.
Darn it, that's what it was.
Yeah.
Yeah, I've done that before. It's like, okay, you built the second one, duplicate, done.
Those were they two females or two male twins?
It was a boy girl.
I believe there were two females.
Okay.
Yeah.
So
I had
So
two
I would-
females.
okay, I would assume if it was a boy or a girl, right? The female
It would be
death
different.
benefit should be a little bit larger than the males.
So I've done both. I had a set of twins that were a boy, then I had a set of that were a boy girl, and that one I did have to actually change it. But when I changed it from male to female, as you said, yeah, the numbers did change a little bit. So yeah, that did make a difference. And I love Anthony here. He's driving, by the way. That's why his stuff looks like this. Yeah. So each situation is, of course, different. But if one has unstable income in an adult,
Can I read it?
yeah, go for it.
There you go.
Each situation is, of course, different, but if one has insurable interest in an adult child, what are the death benefit limits?
That's a good question.
Thinking it'd be different from if a child himself owns the policy, or if living in the home with mortgage in the child's name. How does that factor?
That does actually.
Yeah. So if the child is owning their own policy, it's kind of a bit of a free for all. I mean, they're getting a policy on themselves. It's only going to be what's the maximum amount of death benefit that an insurance company is going to issue on them. If they are below 30 to 40, below 30, it's going to be more like 30 to 35 times their annual income. That's going to be the maximum death benefit total that can be on them. If it's going to be you owning it on the child, they're going to look at that a little bit differently. They don't want you taking up their maximum insurability. So the limit, depending on the situation, might be something small like 250 to 500,000 in death benefit. Depending on the situation, they may allow more. It just depends what the nature is of that insurable interest.
Yep. And I'll just looking it up with Lafayette, their juvenile policy. It depends if they're juveniles or not, or an adult child. But I was actually looking up the juvenile one because that question came up last week. And so this is what they say is your maximum death benefit on a juvenile is up to $500,000, 100% of that of the least insured parent. So if I have $1 million coverage, death benefit, my wife has $500,000, then the juvenile can get up to $500,000 because the wife is the least insured. And then above that, it's 50% of the death benefit of the least insured parent, up to $2 million. And then above that, it goes different. And then what's One America, Linus? They're 50%, right?
Half of the highest insured parent. So if you have $1 million, it can be, and your wife has none. The last I heard, they would be doing half, so 500,000. If you have 2 million and your wife has nothing, the kids could each have $1 million. When you want to go more than $1 million on each child at One America, they're typically, I mean, they don't even have a set guideline on that. But what I've seen them do is go half of the least insured parent once you're working over $1 million on each child.
Gotcha. Okay. And then I've never had a situation where there's a home with a mortgage. The mortgage is in the adult child's name, and the parent lives in the house. I've never had that situation. But that would be insurable interest, of course, on the adult child, because you're residing there, and if something happens to them, you could lose the house. But that's an interesting one.
Yeah, that would be a
Case by case.
unique situation. We would have to ask underwriters on how they're going to view that.
Yeah.
Could be for protection. Could be for asset protection. How old is the parents putting the house into the adult child's name? There's different things behind that.
Right. And then he had a follow-up comment here. It says, with the mortgage in child's name, is amount owed on the house added to the 250 to 500K?
Again, it's a case by case basis. That's not really how they would be looking at it.
Yeah,
the amount of the mortgage might be the only amount they're going to consider. And I'm not even sure that they would consider that insurable interest, because it's like you're a tenant almost. But there would be something there, I think.
Yeah, just have to work with the situation.
Maybe the parent isn't insurable too.
Right.
Yeah.
You know,
Yeah, it's possible.
Yeah.
there's a lot of
Welcome.
what ifs.
Yeah, a lot of what is in that one.
Depends.
It depends. So behind the TV says, I have a friend with a paid off property. He's contemplating getting a home equity line of credit. I suggested he hold off in order to read Becoming Your Own Banker to be aware of other financial options and advice, ? So, I mean, yeah, that would be a good first step, is read that book.
Educate
But-
yourself.
But the question I would have here is, why is he getting a HELOC? What's the purpose for it? What are we trying to accomplish by getting the HELOC? So I'm guessing they're looking to access the equity to invest. Once again, we don't know that. But if they're getting a HELOC, they're probably looking to access the equity, access the funds. So Joe, obviously, you know where we'd go with this.
Well,
You could
let's
do-
break this down.
Mhm.
Each of them don't belong to the other. So he's interested in a HELOC. Reading Becoming Your Own Banker doesn't have anything to do with a HELOC.
Yeah.
All right. So it's different. They're two separate entities, but when you combine them together in the system, now that's what takes you to a different kind of level and a different kind of system. So, I mean, I just didn't want people out there thinking that Becoming Your Own Banker book has anything to do with a HELOC, because it doesn't. It's the utilization and the efficiency of the money that you are taking out of the 2x4s, the equity in your house. Then you're going to create using leverage, and then the velocity of taking that money, running it through the policy, and then putting it into an investment. And that's where the money and the cash flow come back in for coming back into the HELOC and performing the velocity. That's where the system would come into play by using a HELOC, utilizing a policy, and putting it into an asset that would be performing. And that's where that would come. But I just didn't want people thinking that the HELOC had anything to do with Becoming Your Own Banker book.
Right.
Or get that impression that if they're trying to access funds, that getting a policy somehow gives them an endless tube of money that they get access to. That's about
Right.
the money we already have, putting it into the policies. So
There's no magical pot here.
yeah.
The way I always explain it is you HELOC and velocity banking is over here in its own little bubble. You have infinite banking in its own little bubble. You can do them both independently, but they can also overlap.
True.
So, but with this person, it sounds like they're going to be starting with the HELOC no matter what. But once again, we don't know the situation, but they're going to start with the HELOC, and then they can look at it and say, hey, does it make sense to do infinite banking with that as well?
Yep.
Or not?
Exactly.
But that would be obviously I did definitely have them read the book and then schedule a call.
Yeah.
Yeah, I would add to that is, the idea of becoming your own banker. We're not talking about the book. Let's just say you as an individual, you want to use your house almost as a banking system, right? Where you could take it out and then use it and pay yourself back. When I learned that the policy is growing for you and you have the death benefit on top of that, I found out, oh, wow, this is like basically a HELOC on steroids. Why wouldn't I be doing this, right? So yes, for a certain point, before I knew about Nelson Nash's book, before I knew about you guys, that's what I was doing, using velocity banking, becoming my own banker through my own house, through my own self, funding my cars, funding my lifestyle, paying off debt, etc. Then, hey, when you get to a certain point, when everything's gone and you're paid off, now you're looking to other avenues, how to grow your wealth and how to continue to become your own banker on that higher level with the policies, right? So I guess the term becoming your own banker through the book, yes, that's using the policies. But someone could argue that, hey, if you want to become your own banker as a whole umbrella, like Brian was saying, infinite banking, velocity banking, overlapping, then you could say, really, you are becoming your own banker on multiple dimensions or levels, right?
So
Banks are all
Kevin,
about the leverage, arbitrage, and multi-utilization. So if you can find a way to use your dollars more than once and collect any benefit in between the cost of spending versus what you're recouping, you are being your own banker, and you can definitely combine all three of those. That's why we have the 3 diagrams on our website. It's velocity banking, it's IBC, and it's the HELOC.
Mm-hmm.
Your goal is to get to at
So when
least
it comes
7
down
times
to
you're
it-
using your dollar, just like the wealthy.
Right, because you could do become
When
your
it
banker
comes-
with 401k, or you could use it with other things, right? So I guess I'm just thinking overall, someone would say becoming your own banker, you know, you could use different tools, but the most efficient tool that we teach and like to use is all these combined.
And the tool on a very, very breakdown is a revolving line of credit.
Right.
Yeah.
See,
Yeah.
so
Simple
it's
interest.
a revolving line of credit. Is there a steady interest that we have to pay, or are we actually making dividends? So when you combine them, like Brian said, one here, and they kind of take out each other, well, that's where the system plays in.
You know, and it's interesting, Joe. I've had a lot of conversations with people that have a HELOC, already have one. And what kind of blew me away is that they have a HELOC, but they've never heard of velocity banking.
Because they're not doing it the correct way. They're still
Mhm.
keeping their savings over here and their debt over here. So that's the first question. Do you ask that first question on the call? Do you have a savings account?
Yeah. But the interesting thing also is I have found some clients that didn't even know what velocity banking was, but they figured it out themselves to do it. And so then they're saying, well, yeah, we put our income in there and then we just use that as our checking account, like you're talking about.
Yeah.
But they never heard of velocity.
Honestly, till I came around this organization, I'd never heard of velocity banking either.
Yeah.
Well,
Most
I'll tell you
people just use
something.
it for construction, you know, something like that for their house. Oh, I'm going to use it for a bathroom or use it right. They don't know they can use it for other things.
When I started this back in 2009, there were no words for any of this.
Exactly.
All right. So I was doing it and I didn't know what the words was. I just knew, hey, this works. 10,000 comes in, 5,000 goes out, 5,000 goes to the principal. After a year, you just paid $60,000 on your mortgage. Looks good to me. Let's try it.
And it worked. And look at you now.
It worked
Boy,
time
howdy.
after time after time.
Yep. All right, well, we don't have any other questions in right now. So once again, everybody gets those questions in there.
Uh-oh.
But one thing I'll bring up.
Singing.
Let's say, yeah.
You're going to sing for us, Joe?
No,
Yes.
Kevin is.
Oh, wow. Where did that come from?
Go back and watch episode about a year ago, and Linus was gonna dance.
Oh, right. I do remember Linus
Yeah.
dancing or singing.
He
and dancing.
never did. He never did. You want to do it now, Linus?
No thanks.
I better
He's
be
like-
nice. I'll be face to face with him tomorrow. I don't want him mad at me.
He's like this. That
Oh,
was
look at that.
Aw.
Linus, can we just remove you?
But one thing I'll bring up, this is kind of a good question, is pros and cons. So I had someone ask me kind of what the cons are of infinite banking. And so that's kind of more of an opinion thing as well. So I'd like to hear everybody else's opinions here and before I kind of say what I told them.
I only have one.
What's
I
up?
only have one con. You are not able to take out all of the money in the first year.
Yeah.
That's my only con that I ever came up with, because my buddy, after 30 years, when he got his policy, he says, now tell me honest, what are the downfalls? There's only one. And I says, the amount of money that you put in, you cannot take all of it out in the first year. Other than that, I can't really come up with another one.
I think
I've
for
heard that
some,
one, and it's you're in control. So do you have the discipline, the ability to discern what is a proper decision for your money? Because people have gotten HELOCs and lost their homes because they spent it like an endless money bucket, didn't bother recouping what they were taking out and put it back in. the policies, people just treat it like an endless piggy bank, and they don't pay attention to paying the loan interest or continuing the premium funding. So it's you being in control. Are you equipped to be in control of your money?
Okay. Kevin?
And I think for
Or
some,
actually, Tess, you had something.
oh, and I think for some, even though there are ways to work around it, the idea that because it is connected medically, you may have to look for other bodies to ensure if you have problems medically.
Yeah.
That's what I was going to say, right? Like, obviously everybody needs to qualify in some type of way, right? Whether it's income, whether it's your age, or whether it's your medically, necessary, you have to qualify, right? So it's not like just like a savings account. You just go start an account online, log into whatever, Capital One or something, and just start an account, right? It's a little bit different. Does it take a little bit of, I guess, education? Do you have to kind of learn something new? Yes. Maybe that's something different than, there's nothing different than any other, let's say, financial product out there. Like you do need to learn about it, but because it is something different, some people may not want to learn or may not have enough effort or work hard enough to get to that level. But once they do and they surpass that, then they have literally endless opportunities that they could continue to do or grow, or then their future families and generations, right? So I would say kind of just having a little bit of patience, learning a little bit more, a little bit deeper, coming on channels like this and getting on the webinars and really educating yourself versus just, oh, it's not what you think it is, just like the concept that we talk about, like the most difficult thing in America is that,
What
people don't know, it's what they think they know.
Yeah.
That just ain't so, right? And if you could understand that, just that concept, and just put a little bit of effort in, just a little bit more patience, learn this, and then do it, right? Then hopefully hopefully it will work out if you continue to follow along with all the things that we're doing and we teach in this group, in this organization.
And I think not understanding it is fair. I worked in the industry for 35 years, and it's the joke that I came on board to prove Chris a scam. And when I realized it wasn't a scam, I went and got my license and joined on.
Well, I think it was Ethan Evans on the team who had shared a Facebook article about the SEC chair. It was an opinion piece wondering why the new SEC chair and his wife have 54 or 57 life insurance policies. And they had 3 professionals that were racking their brains thinking it must be investments, and they just have no clue. So
Yeah.
No clue.
And one thing I would say that is not, I don't really like to call it cons. That's the term that they use. I just like to say it's just things you have to understand ahead of time. That's how I look at it. One, you have to qualify. That's obviously. But one thing you got to be aware of, unlike a savings account, you can turn off funding a savings account. With infinite banking, you do have to, and I say commit, but you have to, be committed to funding this policy for at least the first 7 years. There is some flexibility inside that, but it's not like people are used to having like a 401k or something like that, or a savings account where you can turn it off, which that's that. But with infinite banking, you've got to actually fund it for a while. And you want to do that though. That's the thing, is you got to understand you want to do that, because the more you do that, the more you're going to get out. So that's just something you got to be aware of there.
And I think that's where fear comes in, because that was one of the reasons I didn't want to do it, because being single and being in the beginning of COVID, I'm like, so what happens if?
Mm-hmm. Well, you can get the cash value back out. So that's another big thing that people say, and I've heard another person say this, and I won't say who that person is, but they said, you can lose your money, you can lose it all. You can lose it all. Well, you can actually, because the cash value, which is what you're building inside this thing, that's your money. You can get it out if you needed to. Borrow back out, or something catastrophic, you cancel the policy, which is very rare, by the way, you get the cash value back out. So keep that in mind. Trying to think if there was one other thing I said to that person. I can't remember what it was. It's not that you got to qualify, all that kind of stuff, but I'm trying to think if there's something else that I brought up, but I can't remember what it is right now.
I would say probably, I was just going to add one other thing for people who, like, there's a lot of flexibility with making a payment. You're in control, right? Maybe you defer making a payment back to your own banking system versus like you have to pay your HELOC, you have to pay your mortgage, you have to pay your car loan, right? The bank will take your stuff, or their stuff, should I say, if you don't make payments on it. Versus our bank or our system, you can defer those payments for a certain amount of time if you have higher debt that you want to take care of. But at some point, yes, that interest will get added on at the end of the year. Another year goes by, the interest will get added on, right? So it can compound as long as you take care of it, right? And then you have a plan for that.
And now Kevin's talking about the loan piece of it, but even the premium deposits that you make, there is some flexibility with that. And in the beginning, I didn't really totally understand that flexibility, but being around this campfire, or anybody that has a policy, reach out to your agent and they can help you if you run into financial difficulties on how to get through that.
Right. That was the other thing I forgot about. It's a, like, let's say someone comes in and says, hey, I'm 50 years old. I want to do infinite banking. I want to do $100 a month. So anybody want to address that comment right there? Because that was the other thing that I addressed when that person asked, pros and cons. That's one of the things I did mention. But anybody want to talk to that?
Yeah, it's probably not going to be enough for a design that's even going to work for infinite banking. Typically, what we find is that the minimum for such a design is going to be 10 times your age monthly. So in that case, if you're 50, $500 a month is going to be about the minimum that works well for infinite banking.
Yeah. You got to have the resources basically to do infinite banking. So that's not a con, by the way. That's why I want to bring that one up. It's not a con. It's not a pro versus con. It's just, hey, there is an amount that you want to put into this thing to make it work the way you want to accomplish your goals. And so, like in that example, that person wanted to put in $100. This is a real client. They said, hey, I want to put in $100 per month. They obviously had not been around the campfire very, very long. They said, I want to do $100 per month, and I want to use this to fund my retirement. I want to retire in 6 years.
Oh, good luck.
Yeah, I was like, I'm doing the math in my head. I'm saying that there's a huge disconnect right there. I don't care if you're putting the $100 into, infinite banking or into the stock market or something else. It's just not enough fuel to power the vehicle. It's just not enough. So, yeah, that was a comment. All right, these are going to be for Joe. Hey, Joe.
Actually, it's going to be Bree. What is it?
Next
What's the
Thursday, 8
Next
to 10
Thursday.
Eastern PM.
There you go.
Late night.
So that's the 7th?
I have the link.
Thursday.
Yep.
Thursday the 7th at 8 p.m. Eastern.
There you go.
I have the registration link. It should be going out. My computer was being crummy. So
Both you and Joe.
How many have you guys done so far?
Just the
This will be number 2.
Number 2?
Yep.
Nice. So Andrew's asking, who's going to be in Atlanta tomorrow? Apparently he knows I won't be there.
I will.
Joe, Linus, Tess, and then obviously most of our other teams are going to be there too. So,
Yeah, Steven, Shauna, Chris.
I just got back, but I wanted to go because then that would mean getting to see my guy Jonathan Sturtzback, who I know is over in Georgia, but that's okay. That's all right. There will be other times.
I got to tell you, Bree, though, if I was a choice of Atlanta or Australia, I think I understand.
Yeah, the world traveler here. She's the world traveler.
there you go. Anthony's asking, Bree, were you going to put it in the chat, or you just being send it out via email?
I don't have the ability to join the chat, but someone
You can
should
put
be-
it in the private chat, and I can put it in if you want.
Okay, yeah. Let me go ahead and give it to you right quick.
So, Mr. Kovacevic, is
Yep, here.
Ariana and Katina coming?
To where
Atlanta.
Atlanta.
I have a daughter that goes to school.
Oh,
No.
I forgot. Sorry.
Okay.
You're not
Ariana,
learning
you're on your
anything
own.
there.
We'll be
It's
back-
okay.
we'll be back on Monday.
I forgot.
Wednesday
Overrated.
starts tomorrow, right?
Yeah. I'm
Yeah,
leaving in the morning.
Okay. So typically, don't we usually, it used to be like Friday, Saturday, and then everybody leaves Sunday. So it's starting kind of like a little bit early. Thursday's the VIP probably.
Yeah, Thursday's VIP, then Friday, Saturday, and then leave on Sunday.
Yeah, I'm leaving Saturday, but I have to be in Indianapolis because I'm going to go to the Nelson Nash training next week.
Nice. Cool.
Brian's putting up the registration link for the second Just Ask Joe episode. There will be a VIP registration coming to our website just to help you guys get the immediate news and updates that come from Real Money Masters too. So you'll automatically be notified of any webinars we do versus having to register for each individual one or catch an AMA or something to learn about it. So stand by for that. That'll be ready when I get it done. Yeah.
Morse code.
What's this in the chat about? HELOC Joe after dark.
Yeah.
Oh, party boy.
What time do you do it at, Joe?
You know,
It's going to be 8 p.m. Eastern.
Okay, that's why. Okay, that's what I thought.
Well, I kind of figured, after work, so then the next one will probably be like on a Monday or Tuesday, like during the afternoon. I'm going to spread it all over the place, so if somebody's at work, then they can watch it at night. If somebody works at night, then they can watch it during the afternoon, just.
He didn't want to make it easy on me for creating a reoccurring webinar. So.
Yeah, and that your hour's different from him too.
Yeah, I'll be more wide awake.
A little bit.
She goes by Joe Standard Time.
There you go. Better be good to her, Joe.
Yeah. All right. Kim China has another question here. It says, if my house is paid off, what's the best way to get access to my equity? And can I use my equity to start my own bank? Well, that's kind of what Joe was referring to previously. But to the first part, there's basically two ways to get access to your equity. Get a loan on the equity, which is a HELOC. That's the preferable way. Or sell that property, right? But I've done both, by the way. I've done both. I had to get access to equity in my home, and I had to sell it. This was many years ago. But you can also get a cash out refi.
I was going to say there's three main ways, and it's loan, sell, or line of credit. And then there's even more within that, because there are companies now that will try to take advantage of you being someone with equity in your home and say, we'll give you a loan for X amount, we'll give you a better rate. And really they're trying to just gain a right to ownership of your home if something were to go wrong and they're owning rights to it. You don't want to mess with those. And with your own paid off, I would just do a second position HELOC, so you're not paying closing costs. You're getting that access, and it's not just one time like with a typical loan.
Yeah, and then Joe, you'll take the second part of this one, but to the first part, what's involved in pretty much every strategy we just mentioned? What's the common denominator? Even with selling your home, by the way, too, is a common denominator. Bank. A traditional bank is involved in almost every transaction. The only other way to do it is to sell your property for cash to a cash buyer, which is not common. Not common. Now, if you're investors, yes, that can be common there. But yeah, you have to get access to capital, but it's through a traditional bank. And so the last thing I'll mention on this one is, like, when you go and do that, when you go get a loan of any kind, what is that to the bank? It's an asset. Yeah, it's an asset to them and a liability to you. What you do next, to me, is what changes the game. If you go and just have a liability, you're making the bank money. If you go and create assets because you got the liability from the bank, now you're doing what the bank is doing.
So that's how I describe. I ask people, is your house an asset or a liability? It's a liability until you take the money out of the 2x4s, put that to work, create cash flow. Now your house is actually making a payment to you, or you're living in your house for free. So now that's how you turn your liability into an asset, to go off of what Brian said. What are you doing with the money after you get access to it from the HELOC? That's the question, and that's where the strategy call comes in. Will you even qualify for a HELOC? What is your credit score? How much money do you make? You have to go through the same process as you did when you got the mortgage, more or less, but now it's just a different product. It's the home equity line of credit. It's just different. But that would be a strategy call, and we would figure that out.
And then, Joe, do you want to kind of summarize kind of the second part of that, what you already kind of explained a little bit before?
And can I use my equity to start my own policy? Absolutely. So if you have your one pot system set up, I utilize my HELOC as my savings account, my checking account, and my investment account. So when I pay my electric bill, it comes out of the HELOC. When I pay my gas bill, it comes out of the HELOC. When I pay my credit card, it comes out of the HELOC. If I were to open a policy, where does the money have to come from? My HELOC. See what I mean? It's a one pot system. So now when you run that money through your policy, what are we going to do with it next? That is the question. Do we have debt that we're going to consolidate inside of the HELOC? Do we have a car payment that we want to debt consolidate inside the HELOC? What is the interest rate on the mortgage? What is the interest rate on the cars? Everything has to math. The math has to math. What is the cash flow that's coming in? Everything has to work and everything has to be figured out mathematically.
Yep. 100%. So this is an interesting question. I want to see if anybody knows the answer to this one. So, hello, can you get a HELOC on and I'm assuming they're referring to a co-op type of property.
I don't know what co-op is.
You'll need
Like
approval
where
from
you
the
have
co-op
shared
board.
ownership.
Yeah, you need approval from the co-op board, and it's using your shares as collateral versus the overall equity in a sense. And they'll only go up to a certain percentage, like maybe 75%, 80%.
That's like New York City. New York City,
Yeah,
like
yeah.
co-op.
It's the New York and New Jersey.
That you could
Oh,
depending on what the agreement is with the association and how that would work, like Bree said.
And then you'll have to find a bank that'll approve it.
Mm-hmm.
Correct. Yeah, and all that too. Yeah. So the short answer is yes,
But
very challenging.
Yes, but
Very challenging. And I know what they are. I've never really come across one personally, a co-op, and I definitely never come across a HELOC on one before. But yeah, it'd be
My new
interesting.
catchphrase: yes, but, or
Yeah.
depend.
give us a call. We'll take the challenge. We'll figure it out.
There
We'll
you
get
go.
you.
and I don't know
One way
which
or the
of the
other.
speakers. I agree with Dexter Holiday's question. I don't know which of the speakers has the smoke detector beeping, but I'm happy to come over.
You came late.
I have to go
Yeah.
get a ladder. I can't reach it.
I was gonna say we can put someone on the shoulders. We'll do this together. We can get it done.
I haven't figured out how to get the cats to detach it, so I didn't hear it until I came in here, and then I'm like, crap.
I thought it was
I was
my
telling
bird.
him when we first started. My dad, I'm a daughter, so you know what happens with daughters. There's one inside the door, one outside the door, one in the hallway outside, and I think I got two of them and missed the third.
Like,
See, Andrew's on it. Andrew's on it. See, he's
Yeah.
saying it depends. I love it.
He
man.
knows.
I love
He knows how it goes.
Favorite
Yes,
line.
but.
I like this one from Tony. He loves that name. Bankers' hours are different from infinite banking hours. Yeah, because it's kind of funny. So, like a traditional bank is what, 9 to 5 or 8 to 5. What are infinite banking hours? 24/7.
That's what I was gonna say.
24/7.
We have hours. There's a period of time where we're not doing the banking.
When it-
The reason why I say that is because with
Working.
infinite banking, it's always working no matter what.
Always working.
Whether you're sleeping, whether you're working, whether you're doing whatever, it's still working for you. So
True.
it never turns off. In fact, my anniversary of one of mine was yesterday, but it hasn't changed, hasn't updated yet. So I'm waiting for that to come in.
What's that good Warren Buffett quote? If you don't make money while you sleep, you will work until you die.
Yep.
Yeah. Well, that's all the questions we got right there. Everybody, we got through them. So any other questions you guys have, put them in there. Otherwise, we might have to call it 10 minutes early. Maybe one of the first time we've done that in a while.
Usually it's
10 minutes over.
5:45.
Yeah.
How many people do we have on?
Well, we can't really tell because we can't see the other channels.
Oh.
But like on
If
the
you're
one we
here,
come
raise
to,
your hand.
yeah, 30 people on this one channel. But yeah, it's also on 1, 2, 3, 4, 5 different Facebook accounts. I think 3 different YouTube channels, and then some other private, and then I think even X as well. Yeah, I like this one. Don't
No,
go.
Oh, don't
Brent,
go.
Making me
Brent.
work. Well, Brent, ask a question, man. But we got a good question here. So this is another one from Anthony. So with the Fed Reserve possibly changing rates this year, by the way, they're not, from what I just heard, right?
Yeah, I think that's what
that was
the
the update today.
webinar.
Yeah. How does that affect policy rates and the guaranteed cash value growth? I have heard there is somewhat of a lag in timing. And it's an economical question, but it's the insurance companies are not tied to the Federal Reserve. They're not. They're private companies. They can do whatever they want within the guidelines. So when I asked that question of the insurance company, this is last year, the response I got was, we're really actually looking at our portfolio performance. So if the Fed changing the rates affects their portfolio performance and the overall rate return they get, that could affect the actual growth of the policy. But as you said, it takes quite a bit of time for that to actually even play out. I mean, I'm guessing probably years and years it would take to really see that effect. So I don't know if anybody else has a different response to that.
Well, last year the interest rate went down with the policies from the year prior to that.
The loan rate. The loan rate.
The borrow rate. Because the dividend rates have been
The borrow rate. The borrow rate went down and the dividend rate went up for the last 2 years that I was doing it, that I saw.
And one thing I like about the insurance companies, they obviously change it one time a year, right? It's got to be closed. They got to tell everybody one time a year versus the Fed rates every single day. You don't know what they're going to be doing. They're moving up and down, or they're staying the same, right?
Yeah, so that's a good thing, Anthony. So yeah, they on your anniversary, that's where they take a snapshot, and that is what your rate is for the year until your next anniversary. So it's not like a HELOC where every other month it could go up and down and up and down. The rates for the policies are, like that, like I said, that snapshot for the year.
Yeah. Yeah. My anniversary was yesterday, and the rate was 7%, and now it's 6.5. So it just went down.
Yeah.
So I see where he clarified he means policy loan interest rates. Those are tied to corporate bond rates, not anything to do with the Fed. I mean, corporate bond rates over the long term do kind of fluctuate, but they're not even really correlated to the Federal Reserve interest rate that gets set. So just for you to know that, I mean, you can even find out from the insurance company how they go about calculating what loan interest rate, because they do have a mathematical formula on a corporate bond index of sorts that they go off of to actually set that policy loan interest rate. And so that's not even hidden from us.
Yeah. Good.
Brent, I just tried the link and it worked. I'll be sure to email you though. That's surprising. I just clicked on it like, oh no, is something wrong? And it worked for me. So I'll find that out and make sure to send you the email.
Yeah, it worked for me too. JAJ, Just Ask Joe.
I saw a question there
Make it into a
about
t-shirt.
policies geared more towards legacy versus cash value.
Yeah, I'm gonna bring that one up in a second. Okay, so Andrew's going there as well. Brent's obviously not going to be in Atlanta this weekend.
No.
Dang it, Brent.
All right.
We'll have to have our own party. Come to Alaska.
My parents are there right now. They're on POW though. POW.
They didn't pick a good time of year to come.
they live there.
Oh.
So they have a house on POW. So yeah. All right. Funky Falk says, do any of you keep policies geared more towards legacy versus cash value? Of the group here, I do actually. So I have a policy and this is kind of funny, it is not an infinite banking geared policy at all. It's a VUL. I've had that policy for a long time. It was my first policy ever, by the way, but I got it for legacy and more for like my family and that kind of stuff. I'm not going to keep it, by the way. It's just, I have young kids. As they age and out of the house, then that policy is going to be moved over to infinite banking, most likely. But it's really cheap. So it's a cheap death benefit in case something happens to me while they're still alive. Or actually, really, they're in the house. After they're out, they don't care.
I was going
So
to say, for me, they all fall under legacy in a sense, because it's what you're doing with the policies and where you're putting the funds that you do borrow from or against the cash value on. I wouldn't keep any just cash value just sitting there unless I had a surplus of money that I didn't have anything else to do with and I just wanted it safe. But there's still my HELOC to keep filling up. So to me, all the policies are legacy, and it's about the education for the family members and making sure there's the family constitution and the family trust set up, preserving it the right way.
I was going to add that every policy is for the legacy. I mean, that's why we do this, for the legacy. Yes, it's set up as banking, and we're able to use the cash value. And then to go off what Bree says, I take that cash value, I put that into assets. So if something were to happen to me, not only does my beneficiary receive the legacy portion, but they're also receiving the asset portion from the cash value of me utilizing it. So that's why it checks all boxes. I say to people, life insurance is for the living the way that I'm utilizing it. It's not for when I'm gone, because I'm being able to utilize it now to protect them. Because after the funeral, what happens to that bank account? It's still getting money every month because of where I put that cash value. Not only are they going to get a check cut from the insurance company because of the death benefit, but they're also, that checking account still going to be hitting every month because of the assets. So,
yeah. And I've actually built some, quite a few policies that are legacy focused, and the cash value was not going to be used. But it was very strategic though. So I think I may have mentioned this one, I think it was maybe last week. This person had a 401k with a good chunk of money in it, but they didn't need it. They had literally, they didn't need any more money. And they said, but I don't want it to go to the government. They said, I want to do something better for my family with that money. I don't want it to get, just when I die, it just goes. So over, I think it was about a 5-year time frame, we're going to move all the money from the 401k into a policy so that it turns into a large amount of money down the road. Legacy, by the way. And then if they need to access the cash for any reason, they can. But this person didn't really need that for that purpose, but they wanted to turn it into a larger amount of money for the family. And so they use infinite banking as to do that, but also, hey, in case we need to access the cash value, we can. So once again, situation specific.
or you can do both with one policy. Who
Yep.
said that you can't get 93% in year one and still do a 50 going to the base, 50-50? Because you can. I can do it. I
think
His
that
next
one,
yesterday.
questions
I think
kind
it
of
was a
went in.
50-50.
I was
Oh.
going to say, Vicky Falk's other questions kind of led into that, keeping
Which
one
is,
for
yeah,
legacy.
Yes, like for him, that's what he's saying. So I guess for me, infinite banking is for my asset production. Legacy would be leaving a future for generations, family constitution, which is what Jason talks about, etc. So yeah, I mean, for me, I want to do both. I always want to do both. And then if you do keep one for legacy, what is the ratio you'd recommend? So the one that I did for this individual, we played around with it quite a bit. It ended up being like, gosh, I want to say it was a 50-50. It had term insurance built into it because we were putting large amounts in over a period of time, but the premium was high. So it wasn't like we do with some policies where you do like a large PUA dump in more than once. This was just a very large premium policy, which means it had a higher base permanent death benefit, and it grew a lot more. So we did a bunch of ratios, but 50-50 was what it ended up being, like Joe mentioned.
Yep. Joe, typically he'll do a 50-50 with about 90% access in the first year, but continuing that 50-50 so that even when the PUA drops off, they're still getting to put in a big portion to base. And by using the IBC for asset production, you know that the assets are going to be paying a reoccurring fund amount or income that's going to go to the beneficiaries automatically when you pass, because you're still going to have the assets will still continue paying. So by using your policies to acquire those assets, you did use those policies for legacy. So it's all legacy in my book.
And I have a new record of year 11 cash on cash too, don't I?
Yeah, what was it, 700% or something like that?
722% or something like that in year 11.
Yeah.
So,
Is that Lafayette?
yeah.
I was saying that's probably has to be able to be them in most cases. Yeah, it's a good one though. Good question there. Let's see here. All right, so Nadia has a question here about the Fed. So the money that stays in the policy is subject to increased loss of value as a worst case scenario in the event of a global de-dollarization or loss of, dollar.
No, because it's not money in that
No.
policy. It's equity in an asset. The policy is an asset, and it's backed by the insurance company's assets, which are some of the most stable assets in the world. So it's not in fiat currency. It's just going to depend on what currency in the future, maybe, that these assets are going to be valued at. So I don't really think so.
I was going to say the dollar's lost a lot of value over the years, but we've continued to see, policies through history that continued the trend of being not a loss of value, but an increase. And
well, you also got to understand that the dollar has lost its value 3 times in history, and one time was in the last 100 years. It was after the World Wars. It lost value, but the insurance company is still profitable, still made money, still paid dividends, all that kind of stuff. So it has lost value before, and it still continued. But this is a question I know that came up on, I think it was Wealth Wednesday or WTF or something, and Chris and I were on there, and he had a good comment on this one. He said, for the U.S. dollar to lose value and to basically not be worth anything, or to change the global currency to something else, is something that potentially could take generations. Even if it started today, we probably would not see it in our lifetime, because it takes a long time to do something like that. That's the belief, but we've never seen it, so who knows? But if something like that does happen, and you lose, and the world loses all its value of currency, I'm not sure how much I'm going to care about my life insurance policy at that point in time. Because if everything has collapsed around the world, you're more concerned about survival than anything else. So that's a question that we get quite a bit, is what happens if the US dollar collapses and has no more value? I can't even fathom what would happen in the world.
Eat the earth. I mean, there's a lot of what if scenarios way in the future that don't need to play a role in your mind space right now.
Yep.
Yeah.
So
we're talking about Terminator, right? And all the computers
I'll get this
back from the future, to help mankind.
It's the language of the contract, for sure, that's going to preserve you, because the dollar value will be replaced with something else, and your contract is, the language in it is about the valuation of that policy, that asset, being based off of whatever the current fiscal ideology is, be it a dollar or be it, I don't know, bingo bucks. Who knows what they're going to come up with, but there's still a legally binding contract that is saying you're owed from the insurance company, and you're not going to be paying more than X amount. It can't increase by more than X amount in a year, and it has a guaranteed growth rate each year. So
it beats inflation.
My response to this one is control your life. Control as much aspects of your life as you possible. So, and this is one way to be it. Be the bank.
Yeah.
Anthony had a good comment here. Says maybe what she's asking is, due to inflation, dollar loses value, but if policy appreciates higher than inflation, or does not, can it weaken it? I mean, yeah, these are all just what if scenarios. Inflation, by the way, is inflating of the money supply, which is caused by the Federal Reserve and the banks, by the way. So in reality, if you want to understand what's going on behind the scenes, this is economics, by the way, go read the book, The Case for IBC. It talks about how to get rid of the banks, because the banks are destroying money, along with the Federal Reserve. So Austrian economics is the theory of getting rid of the Federal Reserve and traditional banks. And if
you can't have inflation without the devaluation of the dollar. They go in hand in hand. So.
So that's a great book, though, and I don't think we'll ever see that in our lifetime, but it'd be pretty cool to see that happen. But it's all about power. Worst case scenario is the more possibly expected increased inflation, plus you keep the rest of the money making money. Yeah.
Right. Got to keep making having your money work for you, right? If you don't have your money working for you, then you're just going to continue to have to work for money. And unfortunately, your income, may not be able to support your lifestyle because of everything increasing, and your paycheck or your job may not give you an increase every year like some jobs.
Good. All right. I got one last question here. Raul Gallardo says, sorry for this question. 36 years ago, my sister's boyfriend had a policy on her name. He passed away 35 years ago. My sister received a call, and after hearing, she hung up and never heard from them again. Did my sister lose that money for good?
No. I am trying to understand the question, though. You said the policy was on her name. I'm assuming you mean that the policy was on the boyfriend, but she was the beneficiary. So if I'm going with that assumption here, that money is still owed to her. If they can't get it to her, they have to pay it into the state's unclaimed property accounts. So that's where I would have her look, is to try to look up unclaimed property. Every state has different websites for that. In the state where she was at the time, it should be there, or be at some, or maybe it followed to the state where she lives now if she moved.
After this number of years, they probably would be with the state, because there's laws around that. You only have like 3 to 5 years.
Yeah. Now, if the policy was on her and she's the insured and he was for some reason the owner, he passes, then if the premiums are not being kept current, that policy could potentially lapse and is no longer there. But it just depends on the ownership structure of it. So, yeah. And this, we'll do one last question. Speaking of funerals, advice as to what's the best way to go about it financially.
If you bury a body in your yard, you can you can avoid some taxes.
Which character are you in the story?
Yeah.
Right.
Ouch, don't make me laugh.
Just sit there and look pretty. Or
Which character are you in the story?
I'm saying it in all seriousness, because if you're planning for your own funeral, you want to be making some preparations and plans and writing it down for people, versus are you having to, like, right now take care of a funeral that is coming up for somebody, like this just happened. It is going to depend there.
Final expense policies are very common. But that's one way to do it. Is final expenses, it's a small premium for a small death benefit, but that death benefit is
way overpriced in the in the context of the type of policies we can get you for infinite banking. Those final expense policies are way overpriced.
They are. They're. I know people that have sold them. A lot of people, and some people we think even on the call may have sold them, but they don't like selling them. It's the weirdest thing. Those agents do not like it usually. And then just be cremated. That's the cheapest thing right there. And I just went through this, by the way. Honestly, buying the plot seems to be save money. My dad's a few months ago, the going rate to buy a plot was 3x what he paid in 2007. Sounds like a pretty good investment.
Yeah, just like any other state. Yeah.
I've actually known people that have done this, by the way. I hate saying this, but they bought plots like this, and they just bought it for cash. 10, 15 years later, they sold them and they 5x their money. They don't like you doing that, by the way. And they try to they now I think prevent you from doing that, I think, but this was years ago. It's kind of weird, but yeah.
Graveyard flippers.
I was going to say, people give Trump a hard time for burying
his wife
channel
right there.
Mar-a-Lago, but it's a way to legally avoid taxes. Just have to do it properly.
Yeah. There's other ways to make money that are a lot less morbid.
I have a family member that buys plots next to every family member that passes. I think they're up to about 6 now.
Oh, wow. That's funny. Yeah. It's funny. It's actually on this. My grandparents, one set passed and they have a funeral plot. My parents had one, and they said they kind of realized, why are we doing this? They don't go to visit their parents really all that often. So now they changed it. Now they're going to be cremated. I just found that out here a few months ago. I'm like, all right. So it's interesting. There we go.
Yeah.
All right, everybody. We're going off track right now.
That's
all right. Appreciate everybody here being on. As always, we went over time for some reason again. It seems like we always do that, but I love it. With that, this recording should be in the YouTube channel, Chris's YouTube channel here this weekend. But with that, we'll see some of you this weekend, not me, and we'll see all of you next week.
Bye.
Bye-bye.